Hello, this is the tradesight Stocks and Futures Index Analysis and Economic Data Roadmap for the week beginning Monday, April 1st, April Fool's Day 2013, ending Friday, April 5th. It is a full week. This is the first week of the second quarter here in the U.S. Little fact that a lot of people don't realize is how much movement in the market is caused by the ends and beginnings of quarters. A lot of times the last couple of days of quarters you'll see stocks be fairly flat and contained on light volume as the funds already have most of the stocks about where they want them for the end of quarter prints on their statements, what we call window dressing. And then the sort of pent-up energy that comes from that holding in place releases on the first few days of the quarter, so you often get moves right after that. It doesn't happen every quarter, but take a look, for example, at this point right here on the chart. This is the S&P 500 index. Look at last August, how flat we were coming into the end of the sort of the month there and the end of the quarter. Right, and then you can look at September. We picked up, we were flat. Now here's October, and October starts to shake around a little bit more. So you do tend to see these moves again. Back in June. June was a decent month in terms of volatility, but July we opened right here. We had an immediate drop and bounce. So you see a lot of that. Commonly, it's the beginning of the year and the midpoint of the year, which is the June to July move. But you can still see it in the move from March to April and sometimes in the move from September to October. So just be aware of that. We could come in after having this last week, which was so light on volume, so generally flat, little drift higher late in the day on Friday. But other than that, fairly contained. Matter of fact, let's take a look at what the S&P looked like last week. Here's there's only 4 days of the week, realistically, because we had Friday off. So here's Monday, Tuesday, Wednesday, Thursday. You can see right up until the close on Thursday, a little drift higher. But other than that, Monday and Tuesday and Wednesday were fairly contained and basically right in the range of the prior week as well. So let's go back to that daily chart as the index continues to just push out to new highs, blowing off 2 seeker sell signals in a row now. It's really impressive. If we do get a reversal to the downside, I'm still looking at that static trend line around 1500 as a first target. Let's also take a look at the weekly chart here, because we blew off a 13 seeker sell signal on the weekly. And remember, one of these risk lines, and you can see it right in there. We zoom it in a bit. The pink line was the risk line from that 13 sell signal, and we even got a new 9-bar setup for another sell signal to the downside. Busted that fairly quickly, and when they break early, we talked about this, leads to big pushes in the markets. Those people have been looking just for a top. There's been no confirmation, none. We've not broken anything to the downside to confirm these signals. Matter of fact, one of the basic ways to go about using these signals is to slap a 10 moving average on there. And you can see that after we got the 13, we've not broken and held under the 10 moving average. So there is no confirmation of any role here in the market. You stick with the trend. Obviously, for what we do, we stick with the intraday activity. So you may get up and down days within the week, but the general trend of the market remains to the upside. Don't spend a ton of time looking for those downside plays yet until you actually get some confirmation. Let's take a look also at the NASDAQ 100 on the daily chart. This is our other favorite index, obviously. A lot of stocks in this index. I'm zoomed in a bit here. This thing's been extraordinarily strange this year so far. January, I've never seen the NDX so flat. We talked about this every week. A little pop-up on February and then flat, drop back down. Then a pop-up here, look at this, in March, and dead flat. I mean, untradeable. And I literally, in 20 years of trading, I've never seen anything quite like that. Volume was better in January and February, and we were seeing some good movement in the market. But as the sequester kicked in, volume's been weak. Got to the end of the quarter here this last week, it got even weaker. So there's really not a lot showing here on the NDX index. Now, let's take a look at some of the key stocks, and you can see part of why this has happened. Looking at January and February, we've got a big sell-off in Apple here. There was a gap to fill on Apple. We talked about this for a long time. This was a target of ours. If you take a look at Apple's chart, all the way back to $420 and change from this gap back in January of last year. It's a pretty big gap. The bigger the gap, the more likely it fills eventually. There's even a smaller gap back here in that 380 area or so. Okay, 385. May come back to that on the next push down, but take a look at this. This 420 gap came and filled exactly. Okay, that's pretty impressive, and that was the low. Now, the funny thing is, on one of these days here, we did leave a little gap up again at 420 after we filled that gap. So there's still a gap at 420. It's just not as dramatic as the one back in January. You can see Apple heading back down now, and then we've got that gap back in the 380 area or so that I just discussed. So Apple's rolling over. But what's interesting is the reason the NASDAQ can be so flat when Apple's the most weighted stock in the index is for other stocks to have been picking up and seeing the money flow into them, and that's what's been happening. Is it's almost a straight transfer from Apple to Google. A lot of that's been what's going on. You can take a look here at Netflix, for example, had a decent January. A lot of that on a gap, though, which is not really tradable. And Amazon itself hasn't been very exciting, but it's another big stock. Still hasn't broken that risk line up there on the 13 sell signal. That's the seeker. That pink line is held and contained the market. No close and then break above that level since it's been formed back in January. So it's really a transfer of money from Google or Apple into Google is what we're seeing a lot of. Let's take a look now. So that's a look at the indices going into this next week. And again, we've been very contained because of what's going on at the end of quarter. Hopefully that turns into something new here now that we're starting a new week. Keep in mind, even though the week we're beginning a new quarter, most of the world, the U.S. markets were closed on Friday. Most of the world's markets are closed on Monday. The U.S. stock market's open Monday, but most of the rest of the world is closed Monday, the day after Easter, instead of on Good Friday like we are here. So Monday could still be fairly light. You'd like to think, oh, new quarter, we're going to get out right away, but with the rest of the world closed, that's definitely going to have an impact. So even if Monday's light, don't let that fool you into thinking that everything's going to be light this week. That is because of the global holiday. Now let's take a look at the economic data that is coming out this week and sort of set ourselves up for what to focus. All right, so starting off on Monday, we've got ISM index and construction spending. ISM index is a decent number. It's 30 minutes into the stock market. That could gap us around a bit. But again, everything else is closed around the globe. Tuesday, factory orders, no big deal. Auto and truck sales in the afternoon, not a big deal. Wednesday, MBA mortgage index, ADP employment change. That's not going to rock the market most likely. ISM services is out at 10 a.m. That's 30 minutes into the market. That can move the market a little bit, but probably not huge. Crude oil inventories after that, not a big deal. Thursday, challenger job cuts, initial and continuing jobless claims, natural gas, nothing there. Friday is the focal point. So we get past Monday, we start trading for real for the second quarter. So hopefully Tuesday, Wednesday, and Thursday can show us some movement and some improved volume. But in terms of the real economic data to focus on this week, it's Friday. We got a double whammy of big data. We've got the unemployment rate that comes with the non-farm payroll data, the NFP data. That's a big one. You can see the forecasts here. Briefing forecasting 185,000 on the NFP data, 7.8% on unemployment, which is a lesser factor. But we've also got trade balance, another big number Friday morning. So Friday could see some action, which isn't normal. But when you've got two huge numbers like that, at least in the morning, you would expect some action for the stock market. It may not carry all the way into the close because it is a Friday. People do leave for the weekend. So let's look at this week one last time and just think about it. Monday, probably a little light with everybody closed, but it is the start of the quarter, so let's keep a look. If volume is decent early, that means the U.S. is going, even though the rest of the world shut down. Seems unlikely, but you'll watch that volume number and you'll know. We'll talk about that in the lab. Tuesday, Wednesday, and Thursday, hopefully we start to see that improved volume and hold, and the market starts to move around for the new quarter. Friday, we've got huge data coming out that's more than likely going to cause some great action early on. We'll see what happens. So stay focused. We hope to see you in the lab at tradesight.com.